Good morning, ladies and gentlemen. Vasil Dikov here, Senior Account Manager with GDMFX. And I will be bringing you today's market outlook. We start with the North American markets. The events from yesterday. The housing stats month on month came out with 171,000, worse than expected. The building permits month on month were 2,000, better than expected. The industrial production month on month was 0.5% better than expected at 0.9%. The capacity utilization was 0.4% better than expected at 77.1%. The January FOMC Minutes show that the committee has kept a positive review on the incoming economic data amidst increasing worries regarding the impact of financial market disruptions. The minutes set up 3 thresholds for the next policy hike. The data should rebound in relative to the fourth quarter, stability in financial markets and increased confidence amongst the committee regarding the balance of risks. On the inflation front, many participants project it to turn to target rate of 2% over the medium term after energy prices and non-energy imports stabilize. However, according to several participants, the inflation outlook is uncertain and they see risks towards the downside. The Dow was 31 points up yesterday. The Nasdaq was 115 points up. The Dixie was up to 96.87 from 96.72. The US dollar appreciated with 180 pips versus the Canadian dollar. And it gained 45 pips versus the Swiss franc. For the remaining days of the week, we're going to have the initial jobless claims, the continuing jobless claims, the Philadelphia Fed Manufacturing Survey, the CB leading indicator month on month, and on Friday we're going to have CPI in Canada. The EU markets. The Swiss ZEV survey came out with minus 5.9. The French CPI month on month was 0.1% worse than expected at minus 1.1%. The French CPI year on year was 0.1% worse than expected at 0.3%. Both the DAX 30 and the CAC 40 were up yesterday. The euro also gained ground against the yen, Aussie, Kiwi and Loonie. It was down versus the sterling and the Swiss franc, and it pared against the greenback. Today and tomorrow, the European Council meeting will be taking place in Brussels, and the EU Council will be negotiating the demands made from the UK in order to stay in the European Union. Moving on to the UK, the climate count change was minus 14,008. The climate count rate was at 2.2%. The ILO unemployment rate was 0.1% worse than expected at 5.1%. The average earnings, excluding bonus, were 0.2% better than expected at 2%, and the average earnings, including bonus, were unchanged at 1.9%. The sterling erased the drop against the euro after the job report showed the unemployment has further dropped and earnings, excluding bonuses, have rose to 2%. Despite the positive news on wages, they are still rising at a sluggish pace, which will give a bit of air to Mark Carney and the Bank of England in relation to their next interest rate move. The sterling touched $1.4245, a level last seen on February the 1st. In Brussels, as mentioned, David Cameron will be beginning his crucial negotiations with the EU regarding the welfare, banking and sovereignty policies of the UK. The FTSE 100 gained 129 points yesterday and closed at 6,021. The pound was 295 pips down versus the loonie yesterday. It was 90 pips down versus the Australian dollar, and it was 200 pips down versus the kiwi. On Friday, we're going to be looking for the public sector net borrowing data, along with retail sales for the month and the year, and retail sales excluding few, again, month on month and year on year. We proceed with the events from Asia and the Pacific markets, mainly China and Japan. The Chinese PPI year on year was 0.6% better than previous at minus 5.3. The Chinese CPI year on year was 0.1 worse than expected at 1.8%. The Chinese CPI month on month was 0.5%. The Japanese export for the year was 4.9% worse than previous, which was at 12.9%. The Japanese imports year on year were 2% worse than expected at minus 18%. The Japanese adjusted merchandise trade balance came out with 119.4 billion yen. The Japanese foreign bond investment was minus 1.318 billion yen. The Japanese foreign investments was minus 562.9 billion yen. The Nikkei 225 rose 100 points yesterday. It opened with a bullish gap of 150 points today. The Canadian dollar was 120 pips up against the Japanese yen, and the Aussie was 70 pips versus the yen. On Friday, we're going to be looking for the Japanese all industry activity. In the Pacific, we had the employment change data, which was minus 70.9 thousand, worse than the expected data of 15,000. The part-time employment was 32.7 thousand, better than the previous at minus 18.6 thousand. The full-time employment was minus 40.6 thousand, worse than the previous with 17,000. The unemployment rate was 6% worse than the expected and the previous reading of 5.8%. The Australian dollar tumbled after the disappointing jobs report, with few doubts about whether the central bank is done cutting interest rates. Employment has fallen after recording the biggest quarterly gain on record at the end of 2015. The surge drew renewed skepticism about the accuracy of labor force data, which the Australian Bureau of Statistics has acknowledged in the past. The figures are probably just a continuation of the data moving back to reality after the unbelievable strength late last year, rather than a sign that the concerns over the global economy are giving Australian dollar and employers pressure. The probability that the RBA will reduce rates to 1.5% from 2% currently by August meetings climbed to 63%. The Australian dollar was 90 pips up versus the Swiss franc, and it was 80 pips up versus the Japanese yen. In the commodities section of the market, the API weekly crude oil stocks fell with 3.3 million barrels last week. The US crude future surged more than 6% before paring some gains late Wednesday as officials from Iran backed a measure from 4 major producers aimed at stabilizing the oil market without specifying whether it will immediately freeze its own production. Later today, the US Department of Energy will release its own figures that could show that US crude stockpiles rose by 3.9 million barrels for the week ending on February the 12th. Gold ticked up on Wednesday before the Federal Reserve's minutes. Gold slipped in Asia on Thursday as investors digested the Federal Reserve's views on interest rates and China's consumer price data. The S&P 500 index had a range of 47 points up to 1,925 points now. Gold had a range of $18 at 1,208. It's going sideways for the moment. Silver had a range of 19 cents. It is at $15.25 now. The crude oil had a $5 range. It is at 33.38 now. Natural gas is trading at $1.95 at the moment with a range of 7 cents. Today we're going to have the EIA natural gas store and change, and on Friday we're going to have the Baker Hughes oil rig count. That is all for today. Thank you and have a nice day.